There are as many ways to define a buy or sell signal as there are analytical methods. Because my method of analysis is derived largely through the study of bar charts, which essentially measure the relationship between price and time, my entry and exit signals are therefore price and time dependent by closing a trading session above or below key trend-defining indicators. Therefore, end-of-day settlements above or below key levels largely determine those buy and sell signals expressed in my daily futures letters. Furthermore, end-of-week settlements above or below key levels are those buy or sell signals expressed in my weekly SPY report. And, of course, end-of-month settlements for those expressed in my monthly ETF Sector Snapshot. And to complicate matters just a bit, as it pertains to long-term indicators and formations that span many months or even years across a weekly bar chart, before considering the reliability of an actionable signal, you need not only settle the week above or below a critical level, but a settlement price that's outside a certain threshold of these indicators. In the world of technical analysis, sometimes close is too close. I'll be addressing these longer-term signal thresholds in greater depth in the final video, Managing Slippage. But for right now, let me emphasize that the bulk of the buy and sell signals mentioned in my newsletter analysis are fairly clean-cut. If or when it's too close to call, I'll be sure to mention as much in the newsletter commentary. Let's take a look at a good example of an actionable buy signal. Let's assume for the sake of this demonstration you have no position. And because this market, the S&P 500 Spider ETF, clearly remains in the grips of a continued bull trend, you are looking for the next buy opportunity. If we zoom into the more recent price activity, you can see overhead nearer term resistance on this daily chart represented by a 4-week descending channel top. It held nicely on the first couple attempts, yet on the third day you can see the market penetrates the channel top on an intraday basis. Mind you, this is intraday activity, and the market has yet to close the day above the 161.47 channel top. During these moments, there's a heightened possibility for what I term jumping the gun, the common knee-jerk response to anticipating a certain buy or sell signal and then acting on that anticipated signal before it's fully materialized. This is where patience is certainly a virtue, for you're understandably anxious at the possibility the market will continue moving higher throughout the day, denying you a more optimal price entry. Now, I'm not about to tell you to not jump the gun, but if you do so, it should be, in my opinion, based upon valid supplementary information, whether it be technical or fundamental. For instance, you could construct the same channel top on an hourly bar chart, which might provide an earlier intraday buy signal upon hourly settlement above the same formation. But keep in mind that the shorter term your data, the less reliable it is in predicting longer term directional moves. Also, if you do jump the gun, let it be supported by a relatively conservative stop loss. For it's quite common for any market to penetrate a key resistance level on an intraday basis only to fall back in the final hour or two of trade to settle the day comfortably below it, thereby maintaining a bearish trend dynamic for the days and even weeks ahead. However, on this particular day, the SPY did settle above the 161.74 channel top, essentially setting off several more weeks of follow-through buying, and with that a continuation of a longer-term bull move. Within all of my advisory letters, whether the daily futures letters, the weekly SPY report, or the monthly ETF Sector Snapshot, you'll notice that within the commentary, the buy and sell signals are always indicated by settlements above or below key levels. For instance, in this corn futures letter from February 2015, you can read, a settlement today above the 396 speed line indicates 409 3/4 within the week, 423 even within 2 to 3 weeks. The process of determining actionable buy and sell signals, especially longer term signals, sometimes involves grappling with the issue of slippage, which is the subject I address in the next and final user guide video, Managing Slippage.